the Central Florida marketplace that will be most damaged by the COVID recession, and my predictions on the changes in that community. Let's check it out. Hey, it's Jared Jones, broker owner of the Jones Group Real Estate in Central Florida. At the outside of this serious update, I want to make it clear that I don't take any joy for bringing the information I'm going to bring today. I'm not trying to do it to be overly sensational. My real goal is to inform. I have personal clients that are trying to exit this particular marketplace. I have people that want to buy there. Please know that as context for this particular video. My prediction, the area that's going to be most impacted by the coronavirus recession is going to be the area south of Disney. South Clermont, Davenport, Reunion, Celebration, Western Kissimmee, Champions Gate, all the way around. The short-term vacation market is struggling. There's really not any turnover. Disney is closed. There is a mass population of short-term income properties, AirBNBs if you will, in this particular area. There are literally hundreds, if not thousands of properties in this area sitting right now, fully furnished, empty, not producing an income. There's a pool of owners, not only locally, but globally, that have properties here. And now we're going month after month into a situation where they have maintenance costs, utilities, overhead, and it's not bringing in the cash flow. Now, I've been watching the entire index of Central Florida has been running about 70% down in terms of total units moved year over year. This area is anywhere from 85 to 90% off its sales turnover rates, and I predict it's not gonna get better anytime soon before it gets a little bit worse. As a quick snapshot of what I'm talking about, you could have entire communities, 29, 30 active listings without a single pending in the subdivision. What happens when supply picks up that high with little demand, prices will react. The most motivated sellers will be bringing the price down to get out of the area. So based on all that, what are my predictions for the future of this area? Prediction number one, short-term rentals switching to long-term rentals. You're gonna see a whole lot of properties in this area that have been taking guests on days and even week-to-week basis are gonna be going to minimum 6 month, 1 year, just because during the phased reopening, you can't even see an international guest in these properties until phase 3, possibly beyond if the governor pushes that out. So the owners that have them now that really need income soon are gonna opt for lower income, longer term rental solution where they might even have to be storing the furnishings off-site. Maybe they rent it long-term with the furnishings inside. Prediction number two, higher owner occupancy levels in vacation home communities. So where the neighborhoods permit it, that don't have such limitations where a regular owner occupant cannot buy and move into the neighborhood, you are going to see a trend with more owner occupants in these subdivisions. Multiple times over the years, I've been in a listing appointment where someone's moving out of a short-term vacation rental area because they want to live into a more established community. I have a feeling that once these values really start becoming very appealing, where someone can look at a home, for instance, in Reunion or Davenport areas, and they can get a beautiful home, swimming pool, fully furnished for what they are going to buy a smaller home, for instance, in Winter Garden down the street with no pool, no furnishings, maybe a little bit lower grade. They're going to make the decision to move into that particular community. So instead of a neighborhood with a street where people are constantly moving in and out of that neighborhood day after day, you're going to see more of an established build in some of the areas. I mean, it's going to be in pockets. I don't see it being like a wholesale turnover, but that is going to be one of the changes we'll see. Prediction number three, the foreclosure danger is going to be in the luxury market and beyond in this particular area. There's been a move to put much larger luxury amenity level homes in the subdivisions around Disney. Now, those particular communities, I believe, are going to suffer, particularly if the person who is investing in those properties was very highly leveraged. They're going to have a lot of expenses hitting them all at once with no opportunity of income on those particular properties. Also, I believe you got to consider this. There's still low demand in those upper price ranges. Talking about prediction number two, the owner occupancy shift, I think a lot of that's going to happen under 400, maybe definitely under 500, but probably mostly under 400,000. The other thing's going to happen too, a lot of those big constructed homes, they're built recently. So when you're buying recently new construction, a lot of times they come at a premium. The builder charges you to bring you that product at retail. It's expensive. You are really above the market at that point. And you know, when the market starts to drift, you are definitely going to be in a long hold position, possibly with anemic income, because the market's not going to recover very fast, how many large, massive parties are going to fill a house and put 25 people in it when there's advisory for 10 people or less to stay in the same place? That is going to become a problem. The demand is going to be a sliver, and also income demand is going to be a sliver. That is going to be a very scary place to be. Only the really financially solvent owners on those particular properties are going to be okay in the long run. I think you're going to see a lot of foreclosure impact, which, by the way, is going to stall building. New construction in that range, history. Like, the market demand is not going to be there because people that own them that want to escape and are going to bring down the price, gobble up what available demand there is. And I mean, how many people want to buy something that really can't make money for them is such a question mark, right? The uncertainty of that type of purchase. So that particular venue, I think anything over 450, 500, vacation, purchase, new construction is going to halt. New construction is going to halt. A lot of different places in the market that's going to happen. I think that age-restricted new builds are also going to see a brick wall that is going to pass, no question, but it's going to experience some pain first. So again, over 500,000 vacation home venues, absolutely believe their margins aren't going to be there for new construction to continue. You might see a couple hammer nails going in, some construction still going on for a month or two. When the builders start to see supply and piling up, demand's not really there, that's going to stop. The margins aren't going to be there. They're going to figure that out eventually. The unfortunate thing, I absolutely think short sales will definitely return in that bigger price point marketplace. There's going to be a lot of opportunities to help people that are going to be deep into debt, and the market's demand and interest to pay for those homes far less than what they purchased for, which is unfortunate. But I think really 450, 500 and above, you're going to see short sales back. If the property's been completely abandoned, you're going to see some foreclosure happening, but we'll just have to see how it goes. Prediction number 4 is a little bit more on the brighter side for this particular marketplace. There will be less supply of available vacation homes when the market's back in full swing. So on the other side of this, remember what I predicted. Builder activity is going to slow down in the area. You're going to have more people converting their homes into long-term rentals. There's just going to be less rooms available for people coming to visit Orlando for a time. It's going to be very nice and attractive. And the people that are sticking it out, that still have a short-term rental, probably the smaller homes, those people are going to experience more occupancy, even though you got to keep in mind how many people are still going to travel here in mass. It's probably not going to be a 2021 massive summer season. There might be a little bit of some fallout as, you know, in relation to the virus itself and how much traffic comes in. So you might be dealing with less travelers in the next summer season, but you also are definitely going to have fewer rooms in the market, which means that should help be a saving grace for the people that are still leasing their home short term. That's it. That's the update for today. By the way, a new video about to be dropped on my Facebook page, YouTube, is an interview with one of the nation's top lenders. If you are in potential harm with your current mortgage with the COVID situation going on, considering refinancing, want to buy a second home, investment property because you're like, wow, Jared's talking about opportunity. That video is going to answer a lot of questions. Mortgage is boring. I'll be the first to say it. Like, my eyes start to bleed when I talk about mortgages because I'm like, this is boring. I like talking about houses. But the reality is there's going to be so much cool information coming down. And a lot of folks are wanting to know, can I borrow cash out of my home right now? Can I stop making my payment? How does that work? Is the interest rates in the 2% range like I'm hearing? All that and more covered in a great interview with Jason Code at Fairway Mortgage. Check that video out. Until next time, stay safe, stay healthy. We'll talk to you real soon. I am so confident that my team and I can get your home sold at a price and in a time frame that we agree on, that if we don't, I'll buy it for cash. Make one call, that's all, and get your home sold guaranteed.
Jared Jones is the way to go. Call 706-5000. Jared Jones is the way to go. Call 706-5000.